Write down the heading. Concept of replacement decision. Concept of replacement decision. Mark question 12 as important. All the questions that we have done so far is whether to buy a machine or not, one variety. Then we discussed whether to buy machine A or machine B. Now the heading that you have written is replacement decision. That is, you already have machine A with you. You purchased it 2 years back, 3 years back, something like this. And what are you thinking today? Should I continue with the same machine or should I replace that old machine with a new machine? Following? Now, some basic concepts before we start. Suppose you are jobless and then you get a job offer from a company and they say we will pay you 20,000 rupee per month. From your house to the office, traveling cost will be 1,000 rupee. Okay, per month. Now, how do you decide whether to accept the offer or not? You'll be earning so much, you'll be spending so much. Net, you will have 19,000 rupee per month in your pocket. Simple. Example 2. You're already working in a company, A Limited is paying you 20,000 salary and that is near to your house, which is costing you 1,000 rupee transportation every month. Then you got a new job offer from B Limited. This is near to house A Limited, but this is very, very far from your house. And they are offering you 21,000 per month salary. Now, is this data enough to decide whether to continue with A or shift to B? You need one more information. What is that information? Transportation cost. If transportation, not transportation, traveling. If traveling cost is 4,000 rupee per month, will you accept job 2? Why no? What calculation you did? As of now, I am getting net 19 and I'll be getting net 17. So continue with the existing job. This itself you understand as machine A and machine B. Machine A, you are earning something. Machine B, you will be earning something. Because of machine A, there are some outflows. Because of machine B, also there will be some outflows. How did you decide whether to continue with existing one or shift to the new one? Depends on how much I am earning now versus how much I'll earn in future. The same thing can be done in one more style. 20,000 revenue or income will become 21,000. So I can write it as extra income. Same decision in one more style. My extra income 1,000 rupee cost will be 4,000. So my extra cost is 3,000. So net I will be spending extra 2,000 from my pocket. Since it's a negative number, changing the job is a bad idea. Able to follow? Now same thing. You already have one machine. Let's call it existing machine, and you're planning to replace that with a new machine. Tell me, existing machine is already earning some CFAT. New machine will also earn some CFAT. The difference between these two will be how much is my extra CFAT. For example, every year you're earning 10 lakh CFAT. By shifting to new machine, you may earn every year 13 lakh. That means every year you will earn 3 lakh extra CFAT. In finance term, this extra is called incremental. Increment is additional, differential, extra. Now 3 lakh per annum, say life is 5 years. That means this much of extra money. But then if you have to buy new machine, you have to pay also. New machine is not going to be free. Suppose that new machine is costing you 25 lakh rupee. that becomes outflow. Sir, but if you buy new machine, what will I do with the existing machine? That you can sell and that can result in some cash inflow also. Able to follow? Now mix everything that I have told you. Today, I will sell my old machine, earn 7 lakh, and buy new machine, pay 25 lakh. So as of now, I'll spend minus 18 lakh in year zero. Following, if I do minus 18 lakh in year zero, how much extra I will earn? 3 lakh rupee. For how many years? 5 years. But you already know we should not be doing 3 lakh into 5 years because this 3 lakh is coming in year 1, 2, 3, 4, 5. Money in future is less powerful than money today. That means this should be multiplied by df1, df2, df3, and so on. Correct? Now 5 years later, I will have new machine with me. That new machine may have its own scrap value. Able to follow? If you buy that new machine, then in fifth year you will have one more income. And then finally, when you work out NPV, if that number is positive, that means shifting to new machine is a good idea. Otherwise, continue with the existing machine. Able to follow? Two, three things to keep in mind. Existing machine will continue to earn some CFAT if you continue with that machine. If you shift to new machine, that will earn some CFAT. The difference is called extra CFAT or incremental CFAT. First of all, you answer why will anybody think of replacing a machine? Maybe old machine is not producing more units. Old technology, speed is less, not very efficient, too much of repair maintenance. Therefore, your thinking will go for an advanced new model, maybe faster output, better quality, and so on. That means there should be some advantage of shifting. But when you have to shift, you have to spend a lot of money in year zero. So how much you spend in year zero versus how much extra you are going to earn in future. Using that, you work out NPV. If the NPV is positive, replacement is a good idea. That means you're not going to do NPV of machine A or machine B. You'll do NPV of replacement decision. If that is positive, replacement is a good decision. If that is negative, replacement is a bad decision. This is similar to job 1 and job 2. I'm already earning so much. If I change my job, I'll earn something more. That means how much extra I earn. Now, to earn that much extra, how much extra I have to spend? Is extra earning more than extra spending? Accordingly, I'll decide whether to continue with the job or not. Done. Now, see this question. WX Limited has a machine which has been in operation for 3 years. That means you bought this machine 3 years ago. It's underline the word remaining life is 8 years. That means I can understand the total life as 11 years, 3 done, 8 more with no scrap value at the end. That means you use this machine itself for rest of its life. Then you won't be able to get any rupee from it. Its current market value is 2 lakh rupee. When you see the word current, they're referring to today's number. That means today itself, if you decide to replace the machine, this can be sold in market for 2 lakh rupee. The company is considering a proposal to purchase a new model of machine to replace the existing machine. That's why our heading is replacement decision. You already have a machine, planning to change it. The company follows straight line method of depreciation. Corporate tax rate is 30%, discount rate is 12%. Present value of summation of annuity or 1 rupee at 12% for 8 years is 4.968. In the previous class, we have discussed when to do the summation of annuities when the annual cash flows are same. For how many years they said? 8 years. Good that they gave. Otherwise, you would have done 1 divided by 1.12, 8 years summation. They also gave you present value of 1 rupee, 12% rate of discount received at the end of 8th year is 0.404. Maybe this is useful for scrap value calculation. If they have given 8th year factor, that is the last year, correct? Maybe this will be used for last line item in the NPV table. Continue. Advise WX Limited whether the existing machine should be replaced or not. That means they want your answer in this sentence whether existing machine to be continued or it has to be replaced. The relevant data is given to you. Think and answer. Cost of machine existing 3,30,000. Are we going to spend this now? Is it year zero cash outflow? When did we pay this money? 3 years ago. So today and future when I'm doing year zero, 1, 2, 3, 4, is this a relevant number to us? No. Estimated total life is 11 years. But out of 11 years, 3 years are done. That means standing today, it is only 8 more years. New machine is also 8 years. That means you're comparing two machines with equal life. Or what if life is not equal? We will discuss it in some other discussion, not may not be today. There is a separate discussion called NPV on unequal life problems. That time we'll discuss. As of now, 3 done, 8 more to go. New machine is anyway 8 more from today. Scrap value 0. This is if you use it for 8 more years. Scrap value 40,000. This is if you buy the new machine today and use it for 8 years. Now see, the main reason why you are planning to replace the machine is this annual output. The old machine can give 30,000 units, whereas the new machine can give you 75,000 units. That means if you shift to new machine, your sales will increase, right? Selling price given, annual operating hours given, material cost per unit, labor cost per hour. So you can multiply that 3,000, correct? And this 40, you'll get labor cost. Indirect, underline the word, cash cost per annum. Yesterday I have discussed this. Now you answer. Is it including depreciation or excluding? Excluding because the word used is cash, correct? Now looking at this table, you have sales, you have material, you have labor, you have indirect cash cost. If you minus all of this, you will get PBDT. Am I correct? I repeat, follow what I'm saying. See on screen. Output into selling price will give you sales. That output into material cost will give you material. Operating hours into labor cost per hour will give you labor cost. So sales minus material minus labor minus indirect cash cost. This will give you PBDT, correct? And then you have to take out D, depreciation. Then you will get PBT. For depreciation, did they mention the method to be followed? For that, you have original cost, scrap value, useful life. Understand whatever you do for existing machine, same thing is to be done for new machine also. It's a comparison. Same particulars, existing machine, new machine, two separate columns, right? And then tax rate is given to you. Then you will reach P80. Then you add back depreciation, you get CF80. Now, when you do this CF80, suppose existing machine number comes to 5 lakh and new machine comes to 8 lakh. Tell me what is the meaning of this number and this number. We will do a big table and finally assume we reach here. What is the meaning of 5 lakh? If I continue with existing machine, I will earn 5 lakh rupee. What is the meaning of 8 lakh then? If I shift to new machine, I will be earning 8 lakh rupee. That means by shifting, I can earn 3 lakh rupee extra. Correct? Extra is called as what? Incremental CF80. But this will be per annum because all the data that we discussed, sales, material, labor, everything will be per annum. This 3 lakh extra I can earn for next 8 years. But if you want to earn, you have to buy new machine. To buy new machine, you have to pay year zero cash outflow. Understanding? I'm just explaining the approach to the answer, not the answer. Don't worry. Answer we will solve. You have to buy the new machine, and when you buy the new machine, the old machine will be sold anyway. And the new machine can be sold at some scrap value at the end of 8th year. You plot all of this in the NPV table, you finally get the result. Okay. Now, nothing to copy. Listen first. Working note 1, depreciation in bracket existing machine. Help me. Original cost. What is the number? 3,30,000. Sir, this we are not spending now, correct? But depreciation is based on original cost itself, correct? You are not spending it today. Hmm. Minus scrap value 0. I have one doubt. I should divide by 8 or 11. Think and answer. 11 years, because depreciation is annual depreciation, and 3 years back you purchased, you will continue to charge depreciation till the end. 3,30,000 is not opening value as on today. It was the original cost. In Calci, what's the number? 30,000 every year. Same way, depreciation if I buy new machine. Go slow. How much is the cost of new machine? 10 lakh. Scrap value 40,000. This 8 or 11 now? Only 8, because you're buying it today and then the life is 8 years. What's the number? 20. Correct? Now, why did I do depreciation? So that I can do CF80 table, statement of CF80 particulars. If I continue with existing machine, if I shift to new machine, correct? I will do for existing machine. I'll give you time to try for new machine. Tell first sales. How many units into what is the price? 4 lakh 50,000. Oh, minus all the expenses I have to take out. First is material. Number of units into, they said 4 rupee, 1 lakh 20,000. Then you have labor cost, 3,000 hours into 40 rupee, 1 lakh 20,000. What else do we have? Indirect cash cost, 50,000. Instead of doing PBDT, I can minus depreciation also now itself and directly write it as PBT. One extra line we can avoid by doing minus depreciation. No, no, no. Existing machine is 30,000. This I'll take out here. Correct? This will give me profit before tax. Anybody? 130 is coming from working note 1. Go to the question. Do we have tax rate? 39, I think. This will be now profit after tax. We add back depreciation. We get 21,000, which is my CFA. All okay? Exact way we do it for new machine. Suppose that number comes to 4,21,000. What is the meaning of this? If I continue with the existing machine, I will earn 1,21,000 per annum. If I shift to new machine, I'll earn 4,21,000 per annum. That means by shifting, I can earn incremental CFAT of 3 lakh rupee every year. Is that correct? Yeah. Start. Working note 1. Depreciation of existing machine. Depreciation of new machine. Mentioned right line method. Hmm. The depreciation that you're calculating is annual depreciation. Hmm. Same amount every year. Once depreciation is ready, you can do statement of CF80. If anyone is doing both existing and new machine columns together, tell me the numbers this side also. 1175, 1125. Number of units are 75,000 into 15, 75,000 into 4, 3,000 into 70. Depreciation is 1. Anyone PBT? 420 or 4430. Add back depreciation, you will get 4,21,000. Understand the meaning. If I continue with existing machine, I will make 121,000. I shift to new machine, I make 421,000. That means by shifting, I can earn 3 lakh rupee extra. 3 lakh is not your earning, 3 lakh is your extra earning. You have completed up to 3 lakh. Then answer. This 3 lakh extra you will earn for how many years? 8 years, because the new machine's life is 8 years. That means 3 lakh, 3 lakh, 3 lakh is for 8 years. To earn that 3 lakh extra every year, what you should do right now? You have to buy the new machine. How much will that cost you? That will be cash outflow. But if you buy the new machine, the existing one can be sold. Why will you keep two machines? You will sell the old machine and buy the new machine. What value you can sell the old machine? That they gave in the first para. Current market value. Current is as on today. That means visualize the numbers. Minus 10 lakh plus 2 lakh is equal to minus 8 lakh. Year zero outflow. Every year 3 lakh, 3 lakh, 3 lakh, 3 lakh for next 8 years. Plus 8th year, the new machine can be sold at what value? 30,000. That means my NPV table will have year 0, 1 to 8 and 8 separately. Correct? And then the cash flows, then the DF, and then the TCF. Right? Listen now. Pay attention. NPV of replacement decision. NPV of replacement decision. Year 0, 1 to 8 and 8. CF80. Don't copy now. Just a minute. You have to pay 10 lakh right now to buy new machine, and you can sell old machine and you will get 2 lakh as inflow. So net cash outflow from your pocket is minus 8 lakh. If you do this every year, you can earn 3 lakh extra. Sir, even otherwise we can earn 1,21,000. No, why are you not taking that? I have taken the net effect anyway. Instead of taking 121 separately, 421 separately, I have taken the net effect directly. And then at the end of 8th year, you will be selling it to scrap dealer, the new machine, not the old machine, because you are thinking of replacing the old with new. If you have new, at the end of 8th year, you can make 40,000 cash in. This should be multiplied with DF. Tell me what is the discount rate, by the way? Already given. I think even the factors are given to you. Minus 8 lakh here. 4.968 and 0.404. Correct. How much is this? 14400. And this will be 16160. Correct. And then if you work this out, NPV comes to positive 7 lakh 560 approximately. Now, what is the meaning of positive NPV? Replacement is a good decision. Replacing is a good decision. Listen, we are not done with the answer. Wait, what if this is 0? What if NPV is 0? Don't say no need to replace. Whether you replace or not, it makes no difference. NPV 0 is not a negative result, correct? What did we discuss in yesterday's class? NPV 0 means accept or reject. That means either continue with existing or shift to new. Now we will see what are the other factors in mind. If the quality of the product is good, which you can't put it in rupee, then you shift, because anyway NPV is 0. You continue with old or shift to new, it won't make any monetary difference. Then you see what is the non-monetary difference. Maybe that consumes less space. So you're happy now in your factory, you got little extra space if you change the machine. Maybe quality is good, some other benefit, you may shift to the new machine. Right? One second, don't copy. There is one more style to present this answer. Understand both and decide which one is okay for you. Second way of presentation, NPV if I continue with existing machine. NPV if I continue with existing machine. Think and tell me, some students do a silly mistake here. If I continue with existing machine, should I spend anything in year 0? That 3,30,000 should I take here? Think and answer. If I continue with existing machine from now for 8 more years, should I do anything in year 0? That means how much is cash out to flow in year 0? Nothing doing. No need to spend. Year 1 to 8, you will earn 1,21,000. See the heading and understand why I wrote 121,000. If I continue with existing machine, I will continue to earn 121,000. At the end of 8th year, what is the scrap value of that old machine? 0. This should be multiplied with discounting factor. This number is with you 4.968. This is 0.404 but no use. This will be DCF 80. Nothing here, nothing here. How much is this? 6 lakh 01 128. This itself is NPV. Correct? Hmm. This should be compared with NPV if I buy new machine. Following? Tell me now. Should you do anything in year 0 if you buy new machine? Yes. You will have to spend minus 10 lakh. Then you will sell the old machine plus 2 lakh. That means what will happen in year 0 is this number. Correct? And how much you will earn from 1 to 8? 4,21,000. Are you following? I'm considering two independent machines now. And then what happens at the end of 8th year? You can sell the new machine for 40,000. Following? Now do this please. Into DF and DCFAT. This will be minus 8 lakh, 4.968. Anyone? 20 1 2091 528. And this will be 0.404 16160. What's the number? 21 lakh? No. One second. 1 3. 688. Now if you see this NPV 601 128 1307 688, higher NPV is better. That means you will say buying new machine is a good idea. Correct? In Calci, just take the difference between 1307688 and 601128. That was the same answer we got here. Okay, you can present it in either of the styles. I think the first one is better, saves lot of time. In fact, you club both these tables, you will only understand. Here it is 0, here it is 8 lakh, and here I have taken 8 lakh. Correct? Here it is 121, here 421. The difference is 3 lakh. I have taken 3 lakh. Correct? Here it is 0, here it is 40,000. I have anyway taken 40,000. Answer has to match. One is gross approach, one is net approach. The net approach is easier than the gross approach, I feel. So the conclusion is, since NPV is positive, replacing the machine is a good idea. Replacing the machine is preferable. Did you understand, everyone? With this, the solution is, I think we have copied up to this line, 3 lakh rupee. Now copy the main answer, NPV of replacement decision. Here CF80, DF at 12%, DCF80. Here 0 will be minus 10 lakh plus 2 lakh. You have to buy the new machine, sell the old machine. Year 1 to 8, you will earn 3 lakh extra. Last year, you will earn 40,000 extra. Since we have future cash inflows, we have to discount them today's value or present value. For that, I have to apply discounting rate 12% already given. In fact, even factors are given. So in exam, if they give you present value table, then copy from the question itself. You don't separately do in Calci. Most of the questions, they are printing discount rates in question itself, not rates, even factors. At 0.909, if they print 0.90, you go as per the question. Then you get NPV positive, and then the conclusion. Since NPV is positive, replacing the machine is preferable. If you want to copy, then only this to you. In exam, only one way of presentation is enough. If I continue with existing machine, this is what happens in year 0. No outflow, no inflow. Year 1 to 8, I'll earn. Year 8, I will not earn anything extra, because scrap value for existing machine in the table third line item, you can see it is 0. That means if I keep this machine for 8 more years, I won't earn any money. Sir, why are we not taking current market value? If you say I am continuing with existing machine, where is the question of selling that machine? Correct? That I have taken here anyway. If I am buying new machine, then the 2 lakh comes into picture. Done. If I continue, I'll make this 6 lakh rupee NPV. If I shift, I'll make 1307. When you have two NPVs, how do you take the decision? Higher NPV, better NPV? Then you say new machine is better than the old machine. Same thing written in two different ways. One last question from my side. Why did we not do year 1, 2, 3, 4, 7, 8 separate columns for CFAT? Because sales, material, labor, everything is same. Depreciation is under SLM. If depreciation was WDV, then we can't write 1,21,000 as one single column. Then you have to do 8 years separately. Don't worry. If question is under WDV, they won't make you do 8 years column. It will be too much of calculation, and that you have to do for two machine. It will be 16 columns. They won't do. If it is WDV, they'll make it only 3 or 4 years. SLM, you don't have to repeat it, so they can ask for 8, 10, 15 years also. Done. With this, solution is over.